New figures from Domain show rents remain near record highs, but rental growth is starting to slow in parts of the country. House rental asking prices were stagnant in Melbourne, Adelaide, Perth and Darwin over the past 3 months, while apartment rental prices fell in Hobart. Nationally, rents rose 2.3% or $15 over the quarter. Sydney is the most expensive city with rents at a median of $800 a week, followed by Perth, Canberra and Darwin at $700. To unpack what this means for renters and where the market goes next, I'm joined now by Nicola Powell, Chief of Research and Economics from Domain. Has rental growth in Australia finally hit a ceiling?
Look, I think it has. We still have record high rents across most of our major capital cities, and competition for rentals is still strong. It is still very much a landlord's market across Australia and across all of our major capital cities. But I think the affordability ceiling is really capping how fast and how far rents can rise. And that is why we're seeing some of our capital cities see a stagnation, a stabilisation of rents over the most recent quarter.
So what does this mean for renters then?
Renters are facing record high rents, but I think what we are starting to see are conditions are improving relative to what we saw in prior years, where we were seeing double-digit increases in asking rents over a 12-month period. We have got much more subdued rates of rental growth. The only capital city I would say that's really starting to re-accelerate in asking rental growth is Brisbane. That is both for house and for unit rents. I think what tenants will be finding is 2026 will provide a little bit more choice, but I think it is going to still be competitive for them. But I think it does show that the rental market is becoming much more fragmented across our different capital cities. And even within cities, we do have some suburbs that are actually seeing a decline in asking rent.
So over the December quarter, vacancy rates edged higher, so meaning a bit more supply in the market. Does that actually ease competition for renters, or is it still tough out there?
It is still tough out there. We still have a landlord's market nationally, but I think what we're finding now is a low vacancy rate isn't necessarily translating now into fast rates of rental growth. We have seen the vacancy rate nudge higher. That is the seasonal impacts. You tend to find choice does lift and it reaches a peak, normally a seasonal peak in December. And then this is now the busy changeover period. This is when we see most leases being signed over January. The vacancy rate is nudging higher, but I think we have a lot further to go to get it to a balanced rental market across Australia.
Now, looking ahead, what does the rental market look like through to 2026?
Look, we are expecting more modest rates of rental growth for 2026. I think the double-digit increases are in the rear view. I think, though, we have to remember it is still a competitive environment out there for tenants, and it does differ depending upon capital cities. I think the structural cooling is definitely evident in markets like Adelaide and Perth. I think Brisbane is the only one where tenants are really facing a re-acceleration in asking rents. Still remains very competitive in the Brisbane rental market. But I think we're likely to see much more modest rates of price growth across most of our capitals and a stabilisation in some.
Now, there's a lot of talk about potential interest rate hikes at the moment. If the Reserve Bank does raise the cash rate, what does it mean for rents?
And that conversation around the cash rate has really made a marked change in recent months, and we're expecting a rate hike to be delivered mid-year, and we could actually see the RBA deliver 2 rate hikes. What that means is it does make it more challenging for tenants to transition to being a first-home buyer. Obviously, the cost of holding debt becomes higher, and it also impacts borrowing capacity. What that might do is actually lock tenants into the rental market for longer and put more demand pressure into the rental market. But it also might have an impact on investment activity. We saw 2025 became the return of the investor for Australia. That helped to translate into slightly higher levels of choice for tenants. But I think if we start to see rate hikes this year, that will slow down the pace of price growth for purchasing properties. And we know investors chase capital growth. So if we see rate hikes, it could slow down price growth. That could be a deterrent for investor activity as well.